Good afternoon and welcome. This is Nolan with Discover NC Homes and Nolan's News. And today I have Pete Chilberg with me of Alpha Mortgage. Pete, thank you for joining us.
Thank you for having me.
And he's here today to discuss, as most of us seen, the pretty big increase in rates and kind of to just go over what are the reasons for that, and also to discuss some of the changes in the industry. So, Pete, we appreciate you being here. And kind of, if you could just touch upon, the rate increase.
Yeah. Around May 1st, we hit the all-time low rates, and contrary to what a lot of consumers think, rates are not driven by what a bank thinks they need to make, where they don't just arbitrarily say, let's go to 4.5 today. Okay. It's market driven, just like the cost of IBM or Microsoft stock. It's the investors in the world buying mortgages.
Okay.
And as the economy started to get some traction and unemployment reports are getting better, the investors are demanding a higher interest rate to buy mortgages. And also the Federal Reserve has indicated they are going to stop subsidizing the mortgage market. They gave the market enough of a thought of it might be coming sooner versus later, and that added to the effect.
And what was the increase, or what is the increase that you saw?
Pretty much went from low threes, from around as low as 3.25% up to 4.5, 4.75. It's kind of subsidized or come back down about 4.5 now.
Okay.
So a little bit more than a percent increase over a 2-month period.
Okay.
But for the last 30 days has been relatively flat. Hoping that leads us to more of a gradual increase.
Yeah, I've heard at least kind of on the street that we're supposed to level off and stay for a little bit. Do you think that's true, or
what we've seen the last few years has been so unprecedented. Every time I try to throw out an opinion, I stop myself because I'm wrong.
Okay.
The experts that we look to say that yes, we should see a very slow, gradual increase, but probably stay at or under 5% for next 6 months or so.
Okay.
But we'll see.
Very good. And also, I know there's constantly change in both our industries, but especially with yours, it seems like there's just been so much change you can barely keep up with it. So what are some of the bigger changes that have happened?
Well, you look back to the heyday of real estate in the mortgage business, 2005, 2006, everything was so loose. Mm-hmm. Well, when the foreclosures came and people lost their homes, the emphasis was then on why are these people losing homes, and supposedly, or in many cases, they were put into loans they couldn't pay.
Okay.
So now the hot phrase in our industry is ability to repay. And both the states and federal government have created laws of lenders may not lend unless they can document there's an absolute ability to repay the loan. Okay. And then they've gone a step further and not just leave it to lenders to decide that. They've created specific rules that you have to meet this test for income. For example, someone could have $4 or $5 million in assets in the bank, but unless they have a documented income stream, it doesn't count.
Okay.
We could debate the logic of it, but on a grander scheme, that's what we've seen in every aspect of lending. It used to be the underwriter had some discretion. If it made sense,
they could.
In the whole picture, it's the loan the lender would do. Well, now, if you're outside the box in any one of 10 categories, by very tightly defined terms, the loan doesn't go through. Okay. So, in a way, it's become much, much, much more document intensive because, again, given 10 categories, you've got to prove step by step by step, paper by paper, that everything meets. And that's the short version of why it takes so much longer and 3 to 4 times the amount of paperwork to get a loan done versus 4, 5, 7 years ago.
Okay. Well, Pete, thank you for coming. It's Pete with Alpha Mortgage, and his contact information will be below.
Thank you.